Hey traders, welcome back to the channel. Today I'm exposing 3 popular pieces of trading advice that sound smart but can actually wreck your trading performance. If you're serious about becoming a consistently profitable trader, you need to hear this. Let's jump right in. First up, buy the dip. Sounds simple, right? Stock pulls back, you scoop it up at a discount, easy win. But here's the catch. Not every dip is a buying opportunity. Sometimes a dip is just the first sign of a much bigger move down. If you blindly buy the dip without confirming strength or a reversal sign, you're basically trying to catch a falling knife. Instead, ask yourself these questions. 1, is this dip part of a healthy move up in the stock? Or 2, is it breaking its support levels and threatening a lower move? Master traders don't predict. We don't buy a dipping stock hoping it'll turn and go back up. We confirm it's going up before we buy. How do we do that? Well, that's a conversation for another time. But we don't make predictions. We make confirmations. Buying the dip only works in the right context. So we learn to read the market and we let it confirm to us what it's doing and we trade accordingly. Okay, the second horrible piece of advice that I've learned to ignore is just hold, it'll come back. This is classic advice from long-term investors, but holding through a crash is a terrible idea, even for them. And if you're an active trader, this mindset is downright dangerous. Some stocks never come back, others take years, and during that time, your capital is stuck, or even worse, shrinking. Master traders don't get emotionally attached. We cut losses quickly, we manage risk, and we live to trade another day. If you find yourself hoping instead of planning, we call that opium. It's a drug. Feels good in the moment, but it'll tear you up. If you're hoping instead of planning, that's not a strategy. That's your signal to reassess. Okay, finally, the third piece of horrible advice that I've learned to ignore is just follow the experts. Listen, I get it. It's tempting to follow someone with a big audience, a flashy lifestyle, or a ton of confidence on social media. But here's the truth. You have no idea what their full position looks like. Are they scaling in? Are they hedging somewhere else? What if they're selling into the hype while you're just buying in? Blindly copying someone else's trade without understanding why they took it or how it fits into their overall strategy is a fast way to blow up your account. Real edge comes from developing yourself as a trader, using a system that fits your objectives, managing your risk, and staying disciplined. Okay, so let's recap. The 3 horrible pieces of advice that I have learned to ignore are: don't blindly buy dips, don't just hold and hope, and don't follow gurus without a plan. Trading isn't about shortcuts. It's about strategy, risk management, and constantly leveling up your skill. If you want to learn more, I and my good friend Blair Nightingale put together a free masterclass called Stock Trading, the New Gold Rush. In it, you'll learn why trading could be the best way to make money right now, what keeps most people from doing it, and what the best way is for you to begin learning strategy, building a system, and developing yourself as a master trader. You can check it out using the link below. Don't forget to like, subscribe, and hit that bell so you don't miss future videos. Thanks for watching. I'll see you in the masterclass, and then I'll see you in the market.